Hi, my name is Billy Campbell. I'm the branch manager of Primary Residential Mortgage, and I have the distinct honor and privilege to be the preferred lender for the best builder in Northern Colorado, Baessler Homes. Today, I want to teach you a little bit about lending options that are out there for you as you're looking to build and buy your new home. But first, I want to tell you congrats. You're already ahead of the curve by the mere fact that you're looking at a Baessler home. I've had the honor to be a new construction lender for over 15 years of my career now. I've worked with every builder up here, and I can easily say Baessler Homes is the best builder up here for two reasons. One, which you've probably already noticed, it's the finish for the price. They just have the best finish and best quality for the price, hands down. But second, and most importantly, what a lot of people don't think about is the warranty. The warranty is really what makes or breaks somebody's experience when they're building a new home. And Baessler Homes has the best warranty in the business, hands down. So that being said, let's talk about loans. I know there's a lot of uncertainty and fear about whether, oftentimes will I qualify or do they have a product for me? Well, believe it or not, there's about a product for just about everybody. So there's really about 4 loans in America that everybody does when they're looking to build a home. First and foremost is the conventional loan. That's just your standard Fannie Mae or Freddie Mac. It's your grandpa's 30, 20, or 15-year fixed rate mortgage. You can do that with as little as 3% down. And obviously, the more you put down, the better it's going to be. Now, the pros and cons to conventional is that it's risk-based. Risk in lending is down payment and credit. So if you have really good credit and you're putting 10% or more down on the loan, most people are going to defer to that conventional loan because you're going to have lower mortgage insurance and oftentimes a lower interest rate, which at the end is going to net you a lower monthly payment. Now, for people who don't necessarily have a large down payment or don't have perfect credit, they'll often go to loan option number 2, which is the FHA loan. Now, the FHA, that's the government-insured first-time homebuyer loan. However, you don't have to be a first-time homebuyer to do it. There are only rules that you can't have 2 FHA loans at the same time. Now, there's some exceptions around that, but for the most part, the general rule is you can't have 2 FHA loans at the same time. Now, FHA, you can do it as little as 3.5% down if you have a 580 or higher credit score, and you can actually do it with as little as 500 credit score if you have 10% or more down. So FHA is a very flexible loan, and it has very high debt-to-income ratio limits, which allows you to qualify for a little bit more of a house than you would on maybe a conventional loan. The pro to the FHA is it's not risk-based. So if you have a 620 credit score, you're going to get the exact same mortgage insurance as if you had an 820 credit score. Same with the interest rates. Interest rates are not risk-based as well. For the most part, if you have a 620 or a 580 credit score, you're going to get about the same interest rate as if you had a 720 or an 820 credit score. The third option or third most widely used loan is the VA loan. So if you're a veteran and you've earned that benefit, there is no better loan out there. I'm a veteran myself, and I've never done a loan other than a VA loan for myself. It's a zero down loan. Very high debt to income ratio allowances. So you often qualify for a larger house than you would on, say, a conventional loan. And most importantly, if you're doing zero down, there's no monthly mortgage insurance. So it'll oftentimes save you $200, $300, or even $500 or $600 per month by not paying that monthly mortgage insurance. And then lastly, another great loan option is the USDA. Now, the USDA is a zero down loan with very low mortgage insurance. The catch on USDA is it's funded by the Department of Agriculture. So it's designed to develop rural housing areas, which they constitute any area as rural as a community with 20,000 or less people. Thankfully, Baessler Homes actually has some communities that are in USDA eligible areas. So those are really the 4 loans that are out there. And then lastly on that, a loan that's often used in conjunction with either an FHA or conventional loan is a down payment assistance program. So there's a few options out there. The most widely used is what's called CHFA, stands for Colorado Housing and Finance Authority. And what CHFA does is they provide either a grant or a silent second mortgage to cover that minimum down payment of 3% on a conventional loan or 3.5% on an FHA loan. So essentially, it's either a regular conventional or FHA loan with your down payment, and the state of Colorado then comes in and covers that down payment for you. So that's a very widely used loan in Colorado. We are actually the number 2 lender in the state for CHFA, so we are very familiar with it and on a first-name basis with everybody over at CHFA. So that's kind of your general overall 30,000-foot view of the loan options out there. As you can see, there is an option for almost everybody. If you have any questions, please feel free to give us a call. Our number is 970-LENDING, and our website is 970lending.com. It's very easy to find. We have been the preferred lender for Baessler Homes since 2009. So we have all of their systems figured out, and we will ensure that this is a smooth and wonderful process for you as you are buying and building your new home. Thank you, and I look forward to hearing from you. Bye.